Doing our fifth lesson. So we'll start from last lesson, our previous lesson. What do you think? What we learned up to now? Anything you remember?
Yes, pretty much loads of things. We studied about basic mathematical accounting terms. For example, we learned about ratios, we learned about proportions, percentages, and also fractions. Along with that, we also studied different formulae. For example, we studied break-even point, target profit, margin of safety, change in components of break-even analysis, and contribution. And also we studied about the averages that could be applied in certain situations. And also we studied about depreciation, different types of depreciations that could be applied. For example, straight line method and reducing method, units of production, and sum of reduced method. So pretty much loads of things.
Well done, great. So during last lesson, we calculated our profit and loss as well, budgeted sales, budgeted revenue, and we discussed, revenues, sales, and turnover exactly the same. There's no difference between them. And we discussed, so many different sort of things. We discussed numbers, we discussed value-added tax, we discussed input and output tax. We discuss about GST and things. We discuss about transaction, what is meant by accounting transaction. And today we are doing LO5, which is called Learning Outcome 5. Be able to apply statistical method or statistic methods which will to provide businesses and the management information. So businesses and management. So is a key focus. We need to look around the data. We need to look around different sources of the data, how we can interpret and use in a business world. So what these numbers in business and in a management perspective, how these numbers and what sort of the information these numbers provide. And we'll see today different companies' financial statement we'll go through. We'll go through what is the difference between data and information and how we can apply the data in a decision-making perspective, in a management perspective within a business. So today is our fifth lesson, and which we are doing, and we are covering Learning Outcome 5. So what is the difference between data and information? Anybody knows?
So data is, I think, more specifically about numbers. It's more accurate. Information could be a simple piece of sentence, not relating to specific numbers or factual statements.
Yes, data is more about raw information, raw data, which is raw facts, no context, just numbers and text. Well done, you very well mentioned. Daniel, you okay?
Yes.
Okay, if any question, ask me, please. Don't not hesitate, okay?
Okay.
Feel free. We all here to just learn. Yes, we are different. We don't need to hesitate anything.
Yeah.
Okay, so data with the context, process data, value-added data. We can it, we can organize it, and we can analyze it, these data. And the data like here, data is 51007. What's the give? It's just the numbers. Yes, no information with it. When data process and proceed, it's become a valuable data, and then we can use it. Like 5th of the 10th 07, the date of your final exam, of course not. So we need to go through. It's a data become information, which will go through how data we can use it. So first place, data is very, very important. Data is a raw facts and raw figure. We use different software to interpret the data and convert into valuable information. We are living in a data world where so much data is available online, so much information, big data concept, data mining company, those arrange the data, lot of information, and other legislation, data protection. No one else steal our data like Facebook we heard about. Yes,
Yes, sir.
data lost at other companies and elections and various things happen with the data. So when we are entering or giving some data online, we need to be very careful, and data protection and some legislation, because everything is recorded somewhere in different part of the world. So we need to be very careful. Data, first thing is a data always. Data is a central thing here that give the basic, yes.
Yeah.
Then we can process it, it's become a information. So data provide the information then, and when we have a information, you have a really good information, it's become our knowledge. Onion, yes, we are moving to the different layers, so it's become a knowledge. When we have a knowledge, first we need a data, then become a information, then become a knowledge, and then we can take action. Yes, we can apply it. So data, information, knowledge, and action is called data to action cycle, which is quite good, in a business. We have a data a lot. We have internal reports, we have external reports, we have a lot of, Ministry of Commerce, law of CBR, revenue, HMRC, here, revenue, tax offices. They provide a lot of data, company house, stock exchange, but depend how that data we can use or convert into the information useful. And when we have the information, it's become our knowledge. We know this company shares, what is happening in the real world. Then on the base of the knowledge, you can decide either we want to invest in company, we want to do business with that company. So on the basis of this, data, information, knowledge, and then we can take action as a management perspective. So financial data, what are the key sources of financial data? Where we can get the financial data? What do you think?
So financial data could be seen from the balance sheet and the other statements like income statements, income and expenditure statements, balance sheet or budget, cash flows, etc.
Well then, so we discuss about, we normally prepare 4 types of financial statement. We call profit and loss, income statement. Second statement, balance sheet. We also call financial position. Third statement, normally we prepare cash flow statement. The fourth we call equity or shareholder statement. So these are 4 types of statement, and these statements provide us financial data. So financial data is derived from many sources, processed in many ways and used by many people. Unfortunate, this meant by there are many chances for errors, capturing the right data at the right time, processing it reliably and correctly, and then sharing it in a timely fashion with the right people is a fundamental of the organization financial control. So end of the day, whatever organization we have, financial data and financial control is very, very important. Like PIA, airline industry, we'll say other companies, we can say Facebook or various other companies. So financial control is very important because maybe we learn in economics according to different school of thought. One modern school of thought, they said, and very well mentioned, Neil Robin. He said is in his book Modern School of Economics, we have unlimited wants, we have unlimited resources, and we need to use these resources effectively. We can use it only when we have a good, financial control, and we know best alternative. Yes, where we'll spend how much. We all have a limited resources. Yes, we can't say we have everything, whatever really we want. So is the limited resources, how we can apply them, that's really matter. So organization often have any question?
No, sir.
Yeah.
Okay, is other thing is very, very important. We need to look around the validity of the data. How we can check the validity of the data? Is
So
meant by validity.
time constraints could be one of the factors to check the validity of the data. Time constraint, for example, how updated or how old the data is. For example, the latest the data, the better would be the analysis of financial data.
Well then, so that's quite crucial. So financial data, when we're looking the validity in terms of the time, if we have a data of South Korea, Korea of 1990, and we are going to set up business there now, it's a totally different world. Yes, it's good now, mm, 25, 30 years. So we need to look around how much we need, at least, last year, 2 year, 3 years old data, not more than that, because things so rapidly change nowadays. So validity of the data, we need to, what are the source of the data? The data where we got it, is its source is authenticated? Because a lot of news carry on coming in the corporate world, we need to look around the credibility of the data as well. So which will, any question?
No, sir.
No, sir.
So we can use it different types of the data to make the decisions. Okay, if you don't mind, just can I quick, pick one call? Sorry, is urgent. That's fine. Okay, so next, that's fine now. Okay, so next is we looking the financial data. First we have a data, then become an information, and then become a knowledge. Data can be internal source within our organization and external source. So what is meant by internal source?
So within an organization, data that is, held by the organization itself.
Yes. So your accounting system and other manages directly from your suppliers and directly from the customer, and numerous personnel, spreadsheet, all these are the internal source of the data. We have a record, our suppliers, our customers, and all these are the internal source of the data. So that is quite important term we use, garbage in and garbage out. So it means the data we input, if we don't have a right input, we don't record the information correctly, we're not going to get the right output as well. Yes. So if we don't have a right base, we can't get it the right information. So ultimately, we need to be look around when we enter our IT system. When first time we're asking customer, where do you live? Well, yes, what start of the business you are in, how often you travel, all anything depends nature of the organization. So we need to be record effectively. When we record effectively, ultimately help. Okay, any question?
No.
And external source of data?
These are the sources outside the organizations.
Okay, what those are?
Internet could be one of the sources. Most of the company's accounts are available on the internet nowadays. Apart from that, we also have uh, different third parties that sell or make these financial data available to the interested people. Apart from that, we also have company's house and other organizations that prepare these data and make them available to the interested people globally.
Good, well done. So these are the different sources of the data, and we can use it. Okay. So we discuss about data and information. We discuss internal and external source of data, financial reports, company house, stock exchange. Those are external, internal company reports and things. So those are the internal. So whatever information we are getting from internal or external sources, we need to be asked the question, good information, what sort of the things need to be contained within that data or information. It need to be up to date. Yes. So as much up to date we can get it, we will try. We have to up to date. Second, we need to look around that information is accurate, accuracy of the information. The data we are getting, how much is accurate? Is it what purposes we are getting the data is relevant? Yes. So we need to check around the relevancy. And then we need to ask, sometime we are paying a lot of money to get the data, but what is the worth of that data? If we are getting the data of 1990, 98, 2000, but that was totally different. That was outdated. That was not update, and we are paying money for it. So we need to look around what is the worth of it to make the decision for the companies. So we need to focus on these points really. Reliability. So who is giving data this? Yes. How much is reliable that? Any question?
No.
No, sir.
And easy to understand and use. If the data is a big numbers, yes, we have so much data, but is it what this represent? Is it people can interpret them and use them effectively? That's really matter, and meet the needs of the user. If you're a marketing manager, we need a data about the customer, data about the taste, data about the branding, data about the advertising, data about the marketing campaign, data about the cost or the utilization of the time. So all these data we need to be look around. Is it the meet the needs of the user if we are a marketing department or marketing manager, or if you are a HR, if you are a production. So we need all different sort of the data depend upon in which department, in which capacity you are working. Any question?
No, sir.
Okay. Next is when we have a data and financial data, it's help us to make the financial plan. Financial planning is very important in our organization. Plan is where we are, where we want to, and what we want to do. If we don't have a plan, its plan is a sort of set nav. Yes, provide the navigation system where you go, which path, how this road or this way leads you and where. So we need to look around financial data and information which we can get is the income statement, like we earlier mentioned, balance sheet, cash flow statement, and we can get some data about the budget, different types of the budget, and we can look around some break even, we can calculate, we can make some lot of decision based on the data. So these all about help us to prepare the future financial plan. Any question?
Yes, sir.
Okay. Sources of financial data, internal and external. We know now. We can list them. Can we list them?
Yes, sir.
So let's start first. Internal sources. Internal sources.
So it could be a company's own accounts, a company's own financial accounts that has been prepared by its accountants.
Okay, good. So we can look around, yes. List to the financial information proceed within our organization and external financial information collected from other sources. Speak your accountant or the financial director if necessary in order to complete your list. So internal source of financial data, which is internal reports about customer, about suppliers, internal accounts which we normally generate, internal audit reports, all these are internal source of data. And external, uh,
So external could be internet, company's house, other outsourced companies that are involved in such data recruitment.
yes, well done. So these are all sort of external and internal. So sources of the data, financial data, indicator reliability can be internal audit report, financial system design, internal checks and control, authority level, complexity of accounting system, financial reports, culture within our organization. Yes. So sources of financial data, we can look around these, and we have a publish account. These are also, it's increase the indicator of the reliability of the data. We need to look around, and on the basis of this, we can um, make various types of decisions. Okay. Next thing we are looking, if you look at the learning outcome 5, especially we are covering today. So between different types of business data, represent and interpret the business data and determine and interpret summary statistics. So this is one of the learning outcome is all about, which we'll go through now, and we are discussing all about these learning outcomes. So next is the financial ratios. Ratios come interpretation of the financial information and convert that ratios in the useful way that help businesses to make decisions. So when we are looking financial ratios are useful indicators of performance and the financial situation. And most ratios can be calculated from the information provided by the financial statement, and ratios can be used to compare between different years. What is meant by benchmark?
So benchmark is it's a certain limit. It's a certain destination that a company reaches. It could be a certain level a company
Well done.
reaches in its business functions or operations.
Yes, like it's a benchmark. It's called key performance indicator, or is a standard, or it's a industry. Basically, the industry as the average what getting. Yes, so that's a benchmark, industry benchmark. Or like in a food industry, we delivering average. The food delivery after cooking maybe in 2 hours, or in 60 minutes within 3 mile radius. So that's a benchmark. We can decide in terms of time, in terms of cost, in terms of quality, satisfaction level of customer. So we can use different ratios as well. Okay, so today we'll discuss some ratios. Those are very important in terms of the business world, and we'll interpret them what these ratios meant by. Can you see the slides?
Yes, sir.
Is it readable?
Yeah.
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 Yes.
Okay, so we can use ratios and ratio analysis. These are different types of the ratios we use, like uh, profitability ratios. So we can use profitability ratios. So profitability ratios help us to decide how much company profit or loss the companies make during the year. So first ratio is the profitability ratio. These ratios measure the relationship between income and expenses, and also profit and loss measure against the equity. So we looking in terms of how much investment we have, how much profit we made, yes, how much expenses incurred, So all these sort of things, we're looking under the profitability ratios. Okay. The second is called liquidity ratio. Anybody knows what is meant by liquidity or liquid?
So it's the ability of a firm in terms of cash, like how fast or how quick the firm can convert its assets into cash.
Well done. So liquidity means the most liquid asset. It means those are near to cash or cash itself. Some asset we can convert it. Like if we have a stock in that stock we can convert into the cash quicker if that stock is less than 1 year old. Yes, that stock is normally stock in mean inventory. We can, and sometimes we have a prepaid. Prepaid mean we paid advance the money people. We can ask them refund our money. That's just the liquid. And liquidity is mean near to cash. Cash itself or any other thing which we can. Sometimes selling building is difficult. It takes a while. So that's not the most liquid. Account receivables, debtors, it mean the people those owe our money, we can give them discount, we can, or the money legally we're supposed to receive, we can give the letters to the bank and bank can lend us money up to 80%, 60% depend upon our company reputation. So that's the liquidity we'll go through. Use of resources. What is meant by use of resources? What type of resources we meant to be?
So the sources are basically the capital of the organization that includes assets and liabilities both. So in this, we could include our current assets, fixed assets, and all types of liabilities.
Well done. So use of resources mean how effectively we applied the resources we have in the organization. Like, we can look around 3 M's for a business. 3 M resources means men, power, money, and material. So if we have a pound, how well we applied them and how the company is, performing it. So use of resources ratios also called efficiency ratios. How quick we are receiving money from our customer, how late we are paying to supplier, how quick we are converting inventory, the stock into the finished good, or how quick we are selling. So if we have a stock we are keeping in our shop longer and longer, it's been blocking your cash. End of the day, cash, oh, you earn less profit, but if your stock regular selling and you converting into the cash quicker, your business will be very viable. So you are very efficient, because sometimes some organization here, even they are happy to sell the car they bought it, because the reason it, if they keep in their warehouse and their shops, actually is cost them more, because there is a holding cost involved. There is a time your money is a block, is opportunity cost is there. So we need to look around use of resources effectively in our organization. Any question?
Yeah.
No, sir.
X ratio is called financial position ratio. We also call gearing ratio. Gearing. Okay, if we'll drive in high gear, what will be happen?
Sir, the speed would be faster and uh, yeah, the speed would be faster.
But
But
high gear mean high risk.
yeah, but that's what I was about to say. That high gear means that if the car's running at the really higher gear, like fourth or fifth, it would be really difficult to slow down its speed abruptly. We'll either get into some kind of accident or kind of incur some kind of other troubles. So just
Yes.
like same way in organizations, high gearing means high risks are involved.
Okay, so in our organization, high gearing mean if you highly borrow money, yes, on the highly interest, and you have a lot of 80% your company is borrowed, and you have only 20% your own capital, it means when you're borrowing more, you're putting yourself at risk. So we need to look around the financial position. So more borrowing money is mean more risk. So more risk mean the organization is going to lose more. Any question?
Yes, sir.
So which will go through profitability ratios. We can calculate gross profit divided by revenue. Then we have ratios operating profit divided by revenue. These are all the formulas there. We don't need to use all, but I put it there for the sake of if earning per share, how much is the number of, so profit after tax divided by the number of shares as a company we are holding. We can find profit from operation and divided by total asset. Daniel, any question?
No,
Yes, no?
no. I'm okay.
Yes, yes, no, no. Okay, no. Okay, so let's, next, liquidity ratio, current asset divided by, what is meant by current asset? Anybody knows?
Yes, sir. These are the assets that have a life less than of 12 months.
Well done. And current liability
Yes, sir. These are the liabilities that are to be paid within 12 months.
within 12 months. So, which we have to settle within 12 months, we can call them short term or current liability, and those help us liquidity position of the company. So, which will go through asset test ratio is also part of the liquidity ratio, most liquid thing. So sometimes stock is not most liquid because sometimes maybe that stock we have, we can't sell it. So we look around total current asset, cash, prepaid, debtors, and we can take out the figure of inventory and we can divide by current liabilities, which we can calculate our most liquid asset test ratios. Use of resources, it means how many, like is one of the ratios we can calculate inventory divided by cost of sales. So cost of sales, it means how quick inventory we are converting into the finished goods, raw material which we are making things how quicker. So this we can go through trade receivable days, how many days we are receiving the money from our credit customer. Trade payable, how many days we are paying to our suppliers. Normally receivable days supposed to be less than the payable days. Why? What do you think?
So because normally when we have to pay in a longer time span, the interest rates are likely to get higher, and the supplier might be reluctant to uh, lend us more products over borrowed money.
Okay, trade receivable, why we need to receive quicker from the customer?
So because it's better to receive our due amounts from our customers as soon as possible. Um, These are the
Yes.
amounts that are needed to be paid by our debtors. Those are the customers. So we need to get the money from them by time.
Okay, so trade receivable mean that debtors are credit customer. So if we receive, let's say, my receivable days 30 and my payable days to supply is 50. So it means 20 days I'm 20 days is my safety net. Yes. So I'm saving for myself 20 days. If I don't have a cash, so because I'm receiving in 20 days from my customer and I'm paying suppliers in 50 days. So it means 20 days is my safety net. So because I have a cash. Yes. So always we need to negotiate with the supplier to pay the longer period of time, but I always look around and chase our customer to pay us quicker as soon as possible. So that will help us to improve the cash flow. Any question?
No, sir.
So which we will go through now, some ratios. Calculate these ratios. So we'll try some ratios. I'll show you some financial statement. Okay. I'll send you this template. Template we normally use is a formula there. I'll send you a formula sheet as well. Because according to your learning outcome, we just need to interpret it, the information. Yes, interpretation is quite important. Instead of, we're not doing purely, it's not a purely finance, it's a sort of, how we can use some figures in a business. So we're just looking. So one is called profitability ratios, gross profit divided by sales. We can calculate different company. We can calculate profit from operation divided by sales, or we call revenue, return on capital employed, and all these ratios. Getting debt divided by equity ratios we can calculate is mean, show that how much debt we have, how much equity mean our investment, our own capital in a business. Interest cover ratios, it mean how many times the money we paid in terms of the interest or profit is higher than the interest. And the liquidity ratios we discuss, how much liquid asset we have within our organization. So these are the ratios we can use it. We have a different company's financial statements. So I'll show you first for next financial statement. We have a Marks and Spencer, quite popular world brand. So their ratios help us. It's quite big, these reports, sometimes finding information. So is here, when we look here, so now if we look, this financial statement is called consolidated. Consolidated mean we have a 2-3 subsidiaries or many subsidiaries company. All the figure we can combine and we can consolidate of 52 weeks figure, and these are the figures there. So like 2015 and 16, how much was our sales revenue in 2015 and how much we have now? What do you think? Is it increase or decrease?
So it has increased.
So we can take the difference, and how many millions increase? Can we take the difference? Two figures? We'll see how much difference.
So we have 177.1.
177.1 million increase from last year to this year in terms of the sales. Sales revenue and turnover is the same thing. So let's do the difference between cost of sales last year, this year.
They too have increased.
Is increase. How much is increase?
2724.2.
67.8.
67.8.
67.8. So if you want to see as a percentage, divide on the base year, this figure, yes, divided by 2656.4. and times by 100, and you can find how much percent is my increase are from last year to this year. How much percent? Hello, we know? Are you there? Yes?
Yes.
Yes, sir. Just a minute.
No problem. Take your time, sir.
So what was the formula? Could you please repeat? Since we have the
No, we
differences,
just this one we just looking. Okay, okay. This one, you already find the difference last year cost of sale and this year. Yes,
yeah.
divided by the last year. Yes, the figure. So we can times by 100. We can find as a percentage because you
Okay.
found as a millions. Yes.
Okay. 67.8 divided by 2656.4, right?
Yes.
And
Yes,
into
times by
100,
100.
it would
So
be
it gives
2.55%.
2.55%. Our cost of sale is being increased compared to the last year,
Yeah.
and we can do exactly with the sales as well, because if our sales is increasing higher percentage than the cost of sales, it means our gross profit is increasing more. Yes.
Yes.
Okay, we'll do the gross profit divided by sales revenue figures. Let's see 2016. 1452.7 divided by 4176.9.
So it is 0.34779.
Times by 100, did we?
Oh no. 34.77.
So 34% is our gross profit. Yes.
Yeah.
Every worth of the pound we are selling the things, 34 pence, we are earning the profit on it. Yes, gross profit, not a net profit. We have some other expenses as well. Yes. Those are not directly, so those are indirect, which is quite good. Yes. Every pound worth of the things we are buying it. Yes. We are earning 34 pence profit on it. So it means it's costing us 64 pence going towards cost, and 34 pence is getting the profit in the net. What do you think? Is good?
Yes, sir. It is good.
So look, these big companies is earning, but they have so many overhead costs. So when we look there, we'll go through the profit from operation. 6666.8 divided by 4176.9. This figure 666.8 divided by 4176.9 times by 100 is giving me my net profit
That is
percentage.
15.96.
So 15.96. So 15 pence or 15% we are earning net profit. So 34% was gross profit, and
Yeah.
it me rest around 19% is going my overhead cost. Those are indirect expense.
Hmm.
Does it make sense?
Yes.
So
You just
maybe
you just
as a managers in the company, we need to focus how we can reduce our overhead. Maybe not from 19 to we can down to 12. Yes, it will save. It mean our net profit will increase as well more. Yes, it makes sense. It will outsource, something IT department or other that will help us to reduce our expense. So always the financial people, they are looking these things, and these numbers itself, speak a lot. So today we learn about different ratios, and we'll do a bit quiz. We are ready? Yes. It's all about the ratios. Okay.
Okay.
It's no test, believe me. It's no test. Okay. No recording test. It's a just clear our concept. Huh? Come on. Okay, just few questions there. So we'll start. Financial ratio uses and user of financial ratios. So first thing, which of these is a liquidity ratios?
current ratio.
Well done, correct. Okay, next, which group of ratios measure the firm's ability short-term obligation? We discussed short-term.
Liquidity ratios.
Well done. Next, which group of ratios nearest focus in terms of their use of resources? We discussed something which other names we can call.
Financial efficiency ratios. So wasn't it about the efficiency?
Which group of the ratios with nearest focus? Narrow focus, yes? Because that's a major focus which we'll go through. Which ratios will most interest to the bank? Bank have a more interest on it. Is it profitability ratios, financial ratios, liquidity ratios, or shareholder ratios?
I think liquidity ratios.
Large debt.
But ratios assess financial position by
Comparing two sets of linked data.
okay, which measure of return in particularly important capital intensive business?
Capital intensive is, I think, ROCE.
Well done, return on capital employed. Okay, which group of ratios measure how effective the firm uses asset?
Financial efficiency ratios.
Well done. Which group of ratios related to the profits to sales and investment?
Profitability ratios.
And so which of the following all basis comparing the ratios except which one?
I don't get this question.
The following are the basis for the comparing ratios except which one? All other are, which one is not?
Basis for comparing ratio.
Comparison with maybe employees? Not sure.
Well, that's correct, yes, because all intra-company even twice their word. Okay, the main sources of information for the ratio analysis is the firms.
Financial accounts. Or maybe management. Not so sure. Confused between these two.
Financial is more because that's health ratios. Well done. So 90%, even 100% because one question was, yes,
Not clear. Yeah.
not clear. So well done because that's a narrow yes.
Okay.
Okay, any question?
No.
No, sir. Just wanted you to upload today's lecture on Moodle. Apart from today's lecture, also previous lectures on this topic.
Yes, all the topic, all the lectures up to now, up in all the previous lectures except today on Moodle now with the recording, with all the handouts, and I'm going to upload this one as well for you.
Okay.
Okay.
So which we'll go through during our next lesson. Lesson 6 is more about the probability and a bit, will equation and things, huh? And we'll discuss assignment as well. Have you done the question which I gave you last lesson?
Sorry, it was difficult. So,
Okay. Try, okay. I think so we finished one or two tasks last lesson, assignment brief ones. So try, if any question, ask me, and during next lesson we'll go through assignment.
okay.
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 So today we learn all about the data, interpretation of data, and how we can use the data effectively in a business. And these are all we can use the statistics, already different statistic as a percentage. We learn about mean, mode, averages. Yes. So these are industry averages as well, and the ratios. These all useful to make the decision in a business. So which will further summarize everything. Okay. Have a nice weekend, and I'll upload this recording online as well for you.
Okay. Thank you, sir.
You're welcome. Okay. Enjoy. Thanks. Bye.